Good morning, my friends. I hope it's been a good week for you. Definitely, there's been a lot of good news floating around. And we have seen the Nifty 50 roaring back with more than a 4% gain during the week. Mostly led by IT at 5.8%, and defense stocks, as your gut would have said, went up by almost 18% during the week. The American markets, the S&P 500 was also up by 4.5%. The Nasdaq up by more than 6% during the week. With all these up, naturally gold came down. Gold fell 4.5% almost during the week. So there was a lot of good things going along. The sentiment about the US-China trade talks, the India-Pakistan conflict coming to a close, and the progress with the US and other countries on tariffs, the possibility of Ukraine-Russia ceasefire, though it didn't pan out, there was the possibility of that. All this kept markets in a positive sentiment during the week. And actually this gives us a good lesson that if you are a news-driven investor, it's very, very difficult to get it straight. It's one day up and one day down. And it's more likely that you're going to be losing than gaining with so many changes happening. I think the best strategy that has played out is to remain invested and pay attention to your asset allocation as far as risk is concerned, rather than try to trade on news. Okay. So with all the talks going on between the US and India, one of the areas that the US is looking to enhance its presence in India is data centers. We have spoken about data centers in the past, but they've come back saying US seeks greater India market access for its data center companies. So let's remember, folks, data centers is likely to be a $10 billion business as far as India is concerned. And India being the largest generator of data in the world and has the least number of data centers in the world. So there's a huge gap which is likely to get filled, and hence big business. And all the biggies are going to be here because it's a very capital intensive business. But why is it achieving prominence in India now? And that is because of the Digital Personal Data Protection Act that India has passed, which says that data generated in India should remain in India. And there's strict laws governing how data or whether data can be transferred from India to other countries, which means that data centers have to be local. So that's one good thing that's happening. And UK plans to tighten visa rules to reduce migration. So this came as quite a surprise when the UK Prime Minister Starmer announced this. Keith Starmer announced this week, because the UK and this Labour government is clearly a left-leaning government, and UK has never been anti-immigration. It has always welcomed people onto its shores. It comes as quite a surprise that the UK Prime Minister would want to look at policies to restrict migration. No doubt they are having a tough time, but this, and you read this along with the news that came on later during the week, that the US is planning to introduce a bill in their house which will impose a 5% tax on all remittances by non-US citizens to countries outside the US. Anybody who's not a US citizen will have to pay a 5% tax in addition to whatever income taxes they are paying if they want to remit any money outside their country, either to invest or send home to their families or whatever. That is quite discriminatory in nature, and we hope that it doesn't get passed. But then look at the kind of challenges that immigrants are going to be facing across the world. As inequality goes up for whatever reasons, things are going to get only worse for the Indian diaspora or any migrants anywhere across the world. Most nations are going into a shell. Most nations are going into a protection mode, protectionist mode, which is not great for trade, not great for anything, if you ask me. But that is what has been set off with in the last couple of years. Okay. An interesting article here under the consumer protection column in Business Standard. It says, legal heir, not nominee, is beneficiary of a policy. So many are under the misconception that the nominee in their insurance policy, or the nominee in a fixed deposit, or the nominee in a mutual fund holding will be the eventual receiver and owner of the inheritance. It is not the case. The nominee by law is only going to hold in trust till the actual legal heir is given the asset or the money. So there was a fair amount of confusion because post 2015, the Insurance Act provided for a nominee to also have beneficial interest, whereas the Indian Succession Act does not provide for a nominee to have beneficial interest. Okay, so this confusion was set right with a court ruling recently. And please remember, nominee doesn't mean beneficiary. A nominee will only hold in trust till it is given to the beneficiary as per the Indian Succession Act or whatever is written in the will. Okay, so please keep that in mind. Then on Wednesday, we had some good news coming in, and the headline reads, April respite. Retail inflation slides to 3.16%. You know, April respite in Bangalore means rains. All right. But here we have the April respite as far as the country is concerned, that inflation slides to 3.16% only. This is good news because it lays open the path for further interest rate cuts by the Reserve Bank of India through the year, which was anticipated. But as we have data coming in, it's good to see. All right. Food prices fell, oil prices fell, but the one thing that stood out amongst all the data was that edible oils went up. Edible oils rose 17.4%, the steepest surge in 37 months. Fruits and inflation in double digits for fourth straight month. These were the two spoilers, but edible oils has a larger weight in the inflation index and hence impacts more. So why did edible oils go up so much more? Let us remember that edible oils are mostly imported. We don't have enough edible oil production in the country. But it's not that it went up because it is imported. Later reports said that actually the demand for oil meal fell. Oil meal is usually consumed by the livestock industry, etc., for their feed mill. Okay? But since the demand for oil meal fell down, the profit margins there fell for the producer. So they had to make it up elsewhere. And they made it up in the oil itself, which is the primary product. So hence edible oil remains at a high price, and there's no clarity as to when this may fall. It may still be hurting Indians' wallets for some time. Okay. The Nifty 50 EPS grew just 4.7% in March quarter. The slowest pace since 2017 is what the headline says. It is what we have been suspecting. It is what we have been saying, that the fourth quarter results are not going to be great. And the evidence is also pointing to the same so far, that Nifty 50 is only going 4.7. So it is not good news. It does mean that we have challenges ahead on the earnings front, which would have repercussions on the stock market eventually. A.K. Bhattacharya has an interesting edit under his Raisina Hill column, and he says, what are the costs of a border conflict? A minor slippage in the deficit target is preferable to a cut in capex. So you see, the budget in the current year had projected a fiscal deficit of 4.4% of GDP. It was riding on a net tax revenue growth of about 11% and a containment of expenditure growth to about 7%, which means that we were assuming 11% growth in revenues and also expenditure to be reduced, the growth rate of growth of expenses to be coming down to 7%. Okay, the overall revenue receipts projections for the current year are reasonably conservative and broadly in line with the growth achieved last year. Yes, if the pace of economic activity in 2025-26 slows a bit as feared, revenue receipts will also take a hit. But the shortfall will be relatively small and will most likely be made good by gains from a higher transfer of surplus from the RBI, which now appears almost certain given the central bank's operations so far. So what Bhattacharya is saying, that we had projected a 4.4% GDP, but we may have slower economic growth, which means we will not collect as much as taxes. But he is hoping that the Reserve Bank's annual dividend to the government, transfer of surplus, will more than make up for this. But given that we have just come out of a 3-day or 4-day conflict with Pakistan, where we would have expended a fair amount in terms of ammunition and needs to be replenished, and that the country needs to be spending more on defense, what happens? So he says further on, in the last few years, India's defense expenditure has stayed at around 1.5% of GDP. This used to be much higher in the past. For instance, the share of defense expenditure in GDP in the year of the Kargil war was 2.4%. Given what happened on India's western border last week, it is now almost inevitable that the government will initiate efforts to ramp up defense expenditure to raise its share in GDP to a level closer to at least what it was the last time India had a border clash. That is from 1.5% to at least 2.4% is what Bhattacharya says it could move to. The pace of increase may be slow, but the direction of change appears to be beyond dispute, and I agree with him that India will end up spending more on defense going forward after our experience. So how do we deal with the fiscal deficit? So if we want to keep the fiscal deficit constant, we have to reduce our capex. If we allow our capex to continue the same, then our fiscal deficit will go up. So at the end of the article, Bhattacharya says that it is preferable that we allow the fiscal deficit to go up rather than cut capex, because that is going to have an economic implication which will be far greater than this. So that was an interesting perspective. And going in, it's actually a continuation of that edit on defense. There's an article here, valuation risk. Avoid entering or do so via SIP with 10-year horizon. Enter what? Defense stocks. So this headline is about defense stocks, warning investors that there is a valuation risk. Even this week, defense stocks went up by almost 18%. It's a very small, limited listed universe that we have in defense, hardly 17 stocks. And as the article says, while the Nifty average PE is only around 21, the defense stocks PE is 52. And with this rise, you can imagine it has gone way beyond 52. Do you think that the defense companies would be enjoying a 50% growth in profits year on year for the foreseeable, for the next decade? If it doesn't, if you don't think so, then surely we're in an expensive zone as far as defense is concerned. Okay, so let's keep that in mind, that if you have an inclination to take an exposure here, maybe you should do it as a very, very long-term SIP. So while we saw the IT index rally this week by almost 5.2%, 5.8%, sorry, not only in India, even the Nasdaq went up. Why? If the US manages to avert a slowdown, manages to avert a recession, then the IT stocks are one of the biggest beneficiaries because they serve the US market so intensely. But while the last year, the Q4 results have not excited anybody as far as the IT industry concerned, here is a headline. Mid-tier IT firms outpaced large peers growth in the FY25. Okay, so revenue growth in the mid-tier firms was way above in double digit. Coforge hit a 31% growth. Persistent had an 18.8% growth. KPIT had a 20% growth, and so on, where all the large companies were struggling with 3% and 4% revenue growth. And their outlooks are also very weak. The biggies are all talking about a low single-digit revenue growth in the coming year. So you can look at what's happening to the mid-tier companies, which are smaller, agile, and are able to grow quicker versus the large ones. Okay, this is generally the debate in growing mid-cap companies versus large cap. The large cap companies tend to plateau. They're safe, but they tend to plateau out. the mid-cap companies have still the world to explore and they grow at a quicker rate. They could fail also at a quicker rate. Well, that is a risk-return trade-off. Okay. Inside article, US-China tariff truce may not hit Apple's India plans. Now, why are we so obsessed with Apple's production in India? Last month, Apple's production in India topped 20,000 crore rupees. 1 month's production in India was 20,000 crores. And just 2 years back, it was hardly 8,000 crores. So now you see why we are so obsessed. How much more is Apple going to produce? Apple had spoken about expanding their India manufacturing base, moving away from China completely, and making India the source for all the phones of Apple consumed in the US. But then Trump had to throw a spanner in the works, and he did it last week by telling Tim Cook that, hey, I don't care what you do in India for in the Indian market, but all phones sold in the US should be made in the US. So he's so keen on creating the manufacturing base, and he will turn screws hard, doesn't matter on who and how, but to get manufacturing to US. It's another story as to how companies are going to manage producing in US given the challenges that US has as far as labor goes. Okay, and as a news article said that Florida had to reduce the working age to 15 years. Apparently, the reason for reducing the working age is to give youngsters greater experience in skills. But I think they are facing a shortage of labor, and this is what is going to be happening. I sometimes wonder, this is a progressive step or a regressive step. The jury is out. Inside, flexi caps pull ahead as small and mid caps lose steam. This category logs the highest net inflows for 4 consecutive months and adds the most number of folios in mutual funds in March, April. Obviously, we saw the mid and small caps falling, going through a severe correction, and valuations going high. And much of the attention moved to large cap. And flexi caps, if you have me say, they are in a good place to take advantage of large caps, and in case they find good mid cap opportunities or small cap, they may load up a little on this. So allowing for the dynamic management, flexi caps have got the largest flows, and amongst all of them, the Parag Parekh flexi cap fund crossed a 1 lakh crore in AUM, becoming the largest single scheme in the country. And there seems to be no way that they are going to split or have more and more schemes coming. They're quite confident that even with a 1 lakh crore kind of AUM, they are going to be able to manage the performance very well. So that's all, folks, for this week. Have a great weekend.